Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Underlying inflation fell to its lowest level in 3 years in the December quarter, according to the Bureau of Statistics. The figures saw annual trimmed mean inflation come in at 3.2%, down from 3.6% in the previous quarter. The headline rate was even better, 2.4%. For the year, just 0.2% for the December quarter. The decline was steeper than many expected, and that will put pressure on the Reserve Bank to cut rates when it meets next month. Warren Hogan is Managing Director of Economics and Economic Advisor at Judo Bank. He also has a great track record of predicting interest rates. Warren, welcome back to Fear and Greed.
Thanks for having me on the show, Sean. It's good to be with you.
Now, you haven't been the most optimistic economist out there, at least for we homeowners. You have actually expected that rates, well, they probably would stay stable, at least for the time being. Do you think what we saw yesterday is enough to shift the Reserve Bank?
Look, it could be. It's very hard to tell. I mean, my assessment of the numbers, along with the broader assessment of the economy, is that we don't need an easing of monetary policy. If you ask the question, what is a rate cut going to achieve? Well, the basic answer is more employment and more inflation. And we don't really need more inflation. It's still above target, and it's still the main source of concern for our community. And of course, employment's strong. And we know from the latest job vacancy data that was released a few weeks ago that actually labour demand's picking up once again. So I don't think there's a case to do it. I think it's actually risky, but that is not necessarily what's going to drive the decision. There's a lot of positioning here, and there's two issues. One is the direct issue of the politics and the general election that's coming up, and the other one is the RBA standing in the community after some missteps in the pandemic. So there is genuine issues that the board will be considering on that front. But if it was just up to the economic case, no, they wouldn't even be considering a rate cut yet. They'd be remaining patient because they never hiked rates as much as everyone else, never hiked rates as much as we would have done in the past. They are trying this experiment, and look, it seems to be working, but part of that experiment is they can't cut rates prematurely.
So there might not be an economic case, but the inference of what you're saying is there could be a non-economic case. Perhaps that's community-based, perhaps that's political-based. Do you think under Michelle Bullock, the governor, they will cut next month?
I don't think, but I don't know the governor well enough, and I don't know the dynamics in the senior team at the RBA, and I certainly don't know the dynamics of the board, because there's a lot of judgment calls in this. I mean, I think one of the misleading elements of market pricing, which is now probably almost fully priced for a rate cut, and the general commentary is this idea that the political risks for them are one way, and that is that they'll upset this government if they don't, or they'll please this government if they do. But this is a two-party democracy. It remains that way. Recent evidence suggests we might be getting even more heading in that direction after the Queensland election. So they've got actually a binary political outcome, which should even itself out, because if they do something that's helps one and hurts the other, that's dangerous for the institution. So, look, I don't know. It's very hard, and this is why markets can't cope. Markets can't cope pricing political risks because they're not used to assessing them.
Yep.
So I would say no, but I don't want to sound like I'm sort of digging in my heels in, but I just sort of take a view on what's best for the economy in our community and everyone in our community. And getting rid of inflation is the number one issue, and I think we saw that at elections all around the world last year.
Yep.
A big swing against governments.
Okay, what about the inflation numbers yesterday? We still do have quite a bit of services inflation, Warren.
Yeah, so the numbers that we got show a welcome easing of inflation pressure. So the worry at the start of last year was that it had stopped falling at about 4% or just under, which was way too high. But in the last 6 months of 2024, there has been a drop down, it looks like, when you extract all the effective government subsidies, which is really important and really tricky. And one sort of myth out there is that government subsidies don't affect trim mean or the commonly used core measure. They do. So my assessment is inflation's probably running on a headline basis around 3 to 3.25, with a few traditional volatile items keeping it a bit low, and core inflation's running at around 3.25 to 3.5, just a bit higher than the reported measure. So it's good. We're getting there, but it's too early to declare victory. And of course, the question for the RBA is, can they be confident inflation's returning to targets sustainably? And the question about sustainably is still an open one. And that's also shaped by the fact that, consumer spending's picking up, employment's strong, consumer confidence is up in the end of last year. So the inflation progress is good, but it's modest and not as good as what the headlines are reporting. And of course, in this sort of febrile political environment, the headlines probably aren't the best way to think about it. They're pretty punchy.
Stay with me, Warren, and we'll be back in a minute. I'm speaking to economist Warren Hogan. This economic cycle, is it a typical economic cycle?
No, it's not at all. And this is the difficulty. I mean, I think the RBA is probably the closest to understanding the big shifts. I think the Treasury's struggled with it. And of course, most bank economists, most private economists seem to be struggling. The big shift has been the retirement of the baby boomers, and what we're now seeing is a rise in dependency in our economy. Our working age population as a share of the total population is shrinking, and that fundamentally changes the balance between supply and demand in the economy. And we've gone from a world for 60 years of excess supply of labour, and unemployment was the issue, and it's all changed, and it's all gone the other way. And the thing that matters for the economic dynamics is the change. It's not the level of the dependency rate, it's the change. So we've got this excess demand for labour. And one of the things that's come up, which no one's paying enough attention to, is that this idea that wages are starting to roll over. The wage price index has come down a bit in the middle of last year from just over 4 to 3.5. But the EBA numbers that the Fair Work Commission puts out have shown in the last 3 months of 2024, they're picking back up again. And we see it on our TVs with the union disputes. We saw a number of settlements of more like 5 or 6%. So the economy's changed, but the fundamentals are still there. So I think it's a very difficult economy to understand. And of course, in the context of a lot of debt, particularly household debt, there's this natural bias to want to have lower rates. But of course, the risks are that we're in a world where to minimise the danger in the economy, you probably want to bias towards higher rates, but that's not what's happening in any way, shape or form. So it's a very tricky period and hard for the RBA because I think they do understand the risks, but the politicisation of monetary policy, which started all the way back at the end of last century with John Howard's debt bust and all that stuff, I mean, it's just got worse and worse over the last 25 years. And it's very hard for the RBA to be genuinely independent and do the right thing by the community over the medium to long term, which they pretty much have done for the last 30 years, but that's now under a lot of pressure.
How do you think the community are handling what's going on? And I suppose I'm referring to the cost of living pressure. I know that we have strong employment and inflation may or may not be heading towards a sustainable rate, but economic growth is still relatively low and the cost of living pressures are real.
Yeah. Well, look, no one, in terms of that, the household level, no one cares about the rate of GDP. It's a figment. Employment matters and the cost of living matters. And the cost of living is just absolutely diabolical. It's fundamentally changed the way Australians feel about their position. Their living standards have generally stepped down 10%, and sort of middle and lower Australians probably by a bit more. And that was after a world where we consistently had 1-2% gains a year for 20 years to make Australia one of the richest countries in the world, and Australians some of the richest people the world has ever seen. So they're struggling to cope with this new world of shifting backwards, and I think that's happening in other countries as well, and hence the political backlash. So I think Australians are the government has taken a very different strategy, and I think it's going to cost them politically very heavily in the next few months. But they've taken a view that it's better to maintain employment and let the inflation thing drag on for longer. I think that's a total miscalculation politically. And I think Australians have demonstrated in the last 30 years that they've got the, intestinal fortitude to take a bit of a hit. And I think we now know, actually, that if rates had gone up more, that the employment consequences wouldn't have been as bad as we feared. So, I think Australians are doing it tough. But if we got rid of that inflation, or at least stabilised it, they would be doing a lot better, and I think that should be the priority. But this country's well placed in this world because we've got a big world, a lot of change coming with this technology, the geopolitical situation. And, one of the reasons we've done so well in the last 30 years is that we've been able to adapt both economically and socially. So it is an interesting time in Australian history, and the next few months actually are going to be pretty poignant, particularly if the RBA does buckle and cuts rates. I think it's could well go down as not a great marker point in our modern history.
Warren, thank you for talking to Fear and Greed.
Thanks, Sean.
That was Warren Hogan, Managing Director of EQ Economics and Economic Advisor at Judo Bank. This is the Fear and Greed Business Interview. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.